All right. Good morning, everybody. I'm gonna just wait for the audio to kick in. Just a minute here. Just gotta turn this down. Okay, perfect. We're good to go. All right. So we have had a lot of movement in the market, and we're gonna go through that today. We're gonna go through and chart out Ethereum, take a look at what it's doing, and man, it's pretty interesting for sure. Did not. It's interesting because in a way I'm surprised by it. In a way, I'm surprised by the velocity in which we have reversed. When we moved up to challenge 3,000 just a couple days ago, it was pretty awesome. And it changed so quickly. But when we were looking at that, we said, has anything really been accomplished? Is there anything that that move up did that we should really take note on? And not really. There wasn't much. It just increased the probability and the likelihood that we were moving up. So all right, let's do this. We're going to share the window so you can see what I see. Okay, so taking a look, you should be able to see this here. Hold on, let me change this. I want you to see the trading view. And if you're on Twitter, you can obviously listen in, enjoy the audio. But if you want to see it live, you can click on the links. First off, there's a StreamYard link where you can actually join in. You can talk if you have got questions, you want to go over something, we can do that. If you just want to watch it and we can live stream it together, and you want to see the chart, see my screen, then join on in. So there's that link as well. All right, ready to go. Ready to go. This is where we're at. And if you take a look, you can see the lines on my chart. We were doing some paper trading. So we put in two buy orders and sorry, three buy orders. Two of them have been filled, right, with the paper trading. And we've got one more sitting at $2,604. This is for Ethereum that we're waiting to get filled. So this is paper trading. Again, not financial advice or anything like that. Whatever's going to keep me out of trouble. But let's put on a couple things. So first off, we did have two positions filled, and now we have an average of $2,708.90. That's our averaged entry because we've had two positions filled already. Now, what are we looking at? Let's first go through the levels that we've mapped out. Let's look at monthly. All right, we have a monthly level that's way down there, 2274. So nothing there that we are looking at in the immediate short term. All right, we had our weekly level, 2710. We mapped that out. It gave us good resistance, but we have broken below that now. So it gave us good resistance, a few days ago, and then yesterday it did, but today we lost that level. So we've got to look lower. Looking lower, we're just above this daily level. We have a daily level at 2618. The next horizontal daily level that we have would be 2521. So, and again, this is for Ethereum. We're looking at the Ethereum USD pair, and this is the perpetual contract provided by Bybit. So if you want to get real specific, this is where you can find that. Okay, so we've got those levels. So 26, 18, 25, 21, and we also have a couple of parallel channels. This is the downward, this is the parallel channel that has been trending downwards. We also have this other parallel channel where we've been trending up, right? And we broke through both of these, but it looks as if, we did get a bounce, but it looks as if the downwards trending parallel channel is what is being more respected. So we'll see what ends up happening. Yeah, interesting. So how low did we go on this candle here today? So if we look, the low is 26.29. Oh man, we were almost filled on that. We were almost filled on that. So a few more dollars, about $15 more, and we would have got our third entry filled. So we definitely had we've been dumping. And you know what I've been noticing is it's mostly in the morning. So for me, it would be like 5 or 6 in the morning, but this would be like 7 or 8. So this is like open, open of the New York Stock Exchange. Crypto has been dumping recently. This has kind of been the trend that I've noticed is when I get up, I'm like, oh wow, we're moving, right? Sorry, I got my coffee here, taking a sip. All right. So here's what I'm doing. I'm still holding my 2604 because there's no reason to not hold it, right? Very, very likely we could be going lower. The stop loss that I have for this trade is set at 2400. And again, with our proper risk management, and when I say again, we talk about this all the time. Proper risk management, we are never risking more than 1% of our total trading portfolio. We are always taking trades that provide us a 3-to-1 risk versus reward, meaning if we win, it's 3 times higher than the losses we take. What does that mean? If we are able to stick to this and we have the discipline, we need to win 3 out of 10 trades to remain profitable. And 30% is not hard to do. There are statistics, there are studies showing that you can flip a coin and be somewhere around 50% accuracy, right? So why do we do technical analysis? We can, instead of just flipping a coin and sticking to risk management. Well, we definitely stick to risk management no matter what. And you can flip a coin, honestly. You can. But no, the reason why is because we want better than 50%, right? We want to try and find an edge. And what all of these indicators are showing us and all of the tools that we have set up in front of us, what this is showing are where other investors are at. So we want to find groups of investors and trade with the market, right? And so it's not that these indicators, that these lines, anything like that they actually have any power themselves. Of course they don't, right? They're imaginary lines just mapped out in the void of this black space here. But what it is that we're finding people that are looking at something similar to what we're looking at and are wanting to buy in. Would be a good level, like a good value level. So for instance, if it's a good value and hey, people are going to be buying in at 2500, like that's a really strong level for Ethereum, that would be a good place to buy in as well, right? And I'm not saying 2500 specifically, but for me, actually 2500, I DCA everything on Ethereum under 2500. I think it's I think it is a great deal. But all right, so let's take a look at where we're going in the short term. Our trade flashed in the positive for a moment, so that's cool to see. That's cool to see. We're like right, because our average buy-in is 27.08 and 90 cents. We're sitting here at 27.06. 27. Oh wait, we're right there, basically even. So, all right. What do we want to look at first? What do we want to look at first? I almost want to see if I can hide these. Yeah, I just need to see if I can hide this paper trade. But I don't know if I can, because I kind of don't want to look at it right now. All right, let's do this. We may just have to live with it. I haven't done the paper trading in a while, so I was learning how to do it again yesterday, but I'm trying to see if there's a way that I can hide it so we don't have to look at it, but it doesn't seem to be the case. So let me see if I can find that real quick. No. So maybe I can start a new chart. Wow, a blinding new chart. It's still on there. my buy orders are still on there for the paper trades. All right. We're just going to live with it for now. We're just going to live with it. All right. Cool. So we can still clean it up a little bit. We have, first and foremost, we have our ascending channel. When is the idea? So right now, the current idea is that we're looking for a bottom, that we're looking for a reversal in this area. And once we have this reversal, we would be putting in a higher low, which would undoubtedly give us a definitional change in market structure, meaning we would be actually in an upward trend because we have a higher low, a higher high, and we would then have another higher low. So that's what we're looking for right now to see if we can get that change in definition where we would then say, all right, we are trending upwards because we have put in these 3 points that require, are required for market structure change. Now, that doesn't mean that we're in the clear. It just means we have another point and another data point. As of right now, we're not necessarily in a downtrend. I guess it really just depends on how you look at the chart, but I wouldn't say that we are in a downtrend. I would say that we're in a sidewards consolidation, because we're putting in higher highs, we're putting in higher lows. I wouldn't necessarily say that this is a downtrend. I would say that this is sideways because it's inconclusive, and sideways can go up or down. So looking at Ethereum, we are right at a very good value area. Matter of fact, speaking of value areas, let's put on this tool we talked about the other day, the VPRV, and oops, let's see where the value areas are, and let's map these out. Okay, so we're going to use our horizontal line tool, and they're not precise, but they're pretty close. So 2453, let me see if I can change that a little bit. Somewhere in there. Here, I'm going to change the setting on this so we can get real granular. So you can go to settings. I have row input at 100. See if we can bump it up to 150. Let's see if we can change it even more. Let's see how high can we go. I think we can do 300. 300. That breaks it up into 300 little pieces. So 2464 is our current, at least for this. Oh, it changed on me. It changed on me. So let's move this up. So if we're looking at just the basically just this year, so I have it on my screen like the 6th of January. Let me see if I can get it just to this year. We'll just do it for the year. Okay, so for the year, what we have is the low volume area, or the value area low, the VAL, the value area low, is actually sitting at about 2586. 2586. And the value area high is approximately 3300 even. So what do I mean by this? I mean between 2586 and 3300 for this current year, we have traded 70% of the volume in that range. So 70% of the volume for this year has been traded between $25.86 and $3,300. So obviously we're closer to the bottom of this value area, right? We're closer to the low, which would be another indicator that we might find more resistance here, right? That we might find not more resistance, but like more support, more buys, because as far as the value area, we're on the lower end of things. So it would be where you're going to attract more of the bulls. As we get to 3,300, that's where we would attract more of the bears, right? People would be taking profit and stuff. So, and the point of control is right here at like 3,015, 3,013, somewhere right in there. So we're well under this point of control, and we're on the bottom line of this ascending parallel channel. At the bottom of the value area, there's some daily levels, a weekly level that we're actually testing right now, because remember, that's 27 and 10. So we're trying to see if we can get above that right now. So there's a lot of reason to think that this is where we would find our support. And I've made it known as such that I think that we're going to find support in this area. That's why I put in 3 buys in this area, actually 4 buys in this area. And my stop loss is down here, 2,400. It's kind of down. It's kind of far, right? I don't necessarily. So here's my thinking on this. If we break below, if we really break below 2,600 or 2,550, and we don't show like an immediate reversal, I'm going to be feeling pretty bearish. I'm going to be feeling like we're going to be going down much lower. But why not have my stop loss there? Because I don't think I would be proven wrong exactly, right? And I don't want to be wicked out right at this level, right? It's still possible because I'm at 24, so I mean it's cutting it close, but I didn't want my stop loss to be too far away. But I definitely wanted to have some distance. And so if things are looking real bad, you know, there's the chance that that we end the trade. But basically, 2,400 is a stop loss. Right now, our trade is actually in profit. We got we're seeing if we can find support at that weekly level of $2,710, and we're right at that level. So we keep flashing between down on our trade and up on our trade. So we'll see. But anyway, okay, we are getting some good. We're definitely getting some buys in this area, and this is what we hope. So let's turn this channel off, this ascending channel. Let me just check the StreamYard. All right. All right, let's turn this channel off and let's move to the other channel, this downward channel. So, and I want to turn that one off right there because we got those levels mapped out. And hopefully this isn't too confusing. We have this top line up here, this top horizontal. This is our take profit. So we're looking at taking profit at 3,255. We are currently bought in at 27.09 and 90 cents, and we're in profit for the moment, for the time being. And 26.04 is our next buy, and then the stop loss is 2,400. So basically, those are the lines. I just want you to understand it. Now, these 2 white lines, these are the value area low, value area high. Let me label these real quick. All right, so here we go, text. So I'll just put VAL, put on the right-hand side, and we'll lock that into place. And this is going to be VAH, value area high. Okay, and between these 2 lines is where 70% of this year's volume has been traded, right? So this is the value area. Now, when we're looking at this downward trending channel here, we want to be looking for, and this is what we're going to be talking about when we look at long-term channels, is we want to see some sort of potential breakout, right? And we thought this is, you know, when we pumped up 2 days ago or 3 days ago or whatever it's been, 2.5 days, I thought, okay, good. This is where we might move into, you know, breaking out, right, of this channel, where we might come up and find some resistance and come down, find some support and come back up and break out and maybe come back and test this a little bit and then move on up, right? Something like this. This is what we would want to see. We didn't. We got confirmation of this channel as we came back down and now hit this this bottom line. of the channel. Excuse me. So because we hit this bottom line, it's still confirmed, right? I mean, there's no doubting that this is still valid. So we want to keep an eye out for maybe some. I mean, this is a pretty good wick. If we look at that, that's a pretty good wick. We still have our weekly level that this would be getting wicked on. It's a pretty. This is pretty good. This is what we want to see. This candle. Let me zoom in. So it's often called like a hammer candle, right? This one right here that I just circled, because it looks like you've got the mallet on top with a handle, right? So it's called like a hammer candle. Now, oftentimes, really what people are describing is something we've talked about where it's a strong bottom, right? Where you have a really big wick on a candle, and we call it a strong bottom. And it's like where price came down and there was just a lot of movement, and we're just reversing right on up and out, right? So this is looking pretty good. But look, we have the center line. This is going to be resistance. I mean, why wouldn't it be? That's going to be resistance. We have the top line, right? So just because we're moving up doesn't mean we don't hit this resistance and come back down and put in a lower low. Or we come up a little bit higher and then come back down for a lower low. All of this is still in play. No doubt about it. No doubt about it. We are waiting to see what the market decides to do, and this is all we can do, right? We have our trade. We believe in the technical analysis. We think that this is a good value area, and we're buying in as we can, right? And that's fine. 2,400, we'll get stopped out, and we'll take our loss because you're going to take losses. If that happens, obviously, I think and hope we're going to win this one. But we really want to see something like maybe we come up here, we hit this, yes, we get resistance, but then we find support, right? And then we come back up and we break above, and then we want to come back and test this, right? So it's going to be kind of the sideways. We're transitioning from down to across, right? And then hopefully up, right? And we've talked about a rounded bottom. That would be a rounded bottom if we were able to do that, where you come down, sideways, and across, or sorry, down, across, and up. So we'll see if we get that. I mean, these levels have been mapped out. You know, I'm very good with this trade. See what happens with it. Okay, we'll see. And I'm okay missing this 2604. You're never going to call the bottoms perfectly. Let's actually just put a horizontal on this. I would love to see if there was some support levels. Right there. Right there. It's pretty good. Right here is pretty good. You could map this out as a daily. I mean, you could, right? You wouldn't necessarily get it off of that, maybe not off of that. But there, maybe there. So this is kind of like a more subtle level. I wouldn't necessarily have it on mine, but hey, you know, maybe we're putting in a new level. Who knows? All right. Very cool. So let's talk about, let's back out a ways. Let's hide these. Let's create this. So by the way, bottom right hand side, click this. You can create a folder, right? We're going to take these two horizontal lines and we're going to put them in a folder. We're going to call this, well, let's rename it. So value areas, we'll put in year. So far, this is true, okay? We got them locked. we can hide those now. I wish we could hide these lines, but we're gonna have to just deal with it for now because I don't want to delete them. I definitely want them to play out. Is any of this? Okay, okay, good deal. So what we want to look at is long-term channels. So we're looking at Ethereum, we're on our daily chart, and here's what we've got. So basically, long-term channels are simply parallel Fibonacci channels used on the log scale. I didn't realize I was on log scale. Hold on a second. This might change things. That's what I thought. That's what I thought. I apologize, everybody. I had log clicked on and I didn't even realize it because I was like, I thought we hit those levels with a little bit more precision, right? Look at we did. We absolutely did. So log, it's see that change? Okay. It's because it kind of flattens things out. Basically, that's what that does. So I apologize for not recognizing that I had that clicked. This is perfect. This is perfect, right? It doesn't actually give us much clarity on which one of these we're trading. But this is why we have a group of investors that wanted to trade well, let me delete this. Wanted to trade the downward, like this ascending channel. Sorry, I kind of feel silly that I missed that log. Okay, let's turn this off. It's just going to be that way. Okay, so we have this bottom line. We have a group of investors that said, yep, let's go, let's buy that. And we also had this bottom line. A group of investors said, yep, let's go, let's buy that. And right here, basically where they connected, that's where we touched. And it is no surprise that we got pushed right on up and out of here. So that's pretty cool. Yeah, so there's log, moved it off. There we go. I thought when I was looking at it, I was charting it on my phone earlier and I was like, oh man, that's dead on. And then I got on my desktop and it was off. And I thought, oh, maybe it's just, I don't know, maybe I wasn't as precise with my phone, even though it looked good, right? That's what it was. That's what it was. Okay, sounds good. I love it. All right, so perfect. This right here is a work of beauty. We had at least two levels, for investors. Actually, we even had our daily level, which didn't get touched, but is really, really close. Let's see about daily, weekly. We're above the weekly still, barely by like $3. All right. And you know what? Let's do one other thing. We haven't done that. See, now it looks a little bit more flat to me. Anyway. All right. I want to see if we can just do something real quick. Want to mess around with some time fibs. Where are we at? Where are we at? Here we go. Come on. Okay, so this would be really interesting to see what happens. Okay, so the end of May, maybe the 26th, 27th, 28th, somewhere in here. Maybe this is when we do truly have our break outwards. So maybe we continue to mess around in here, right? We're coming and we kind of come to this crux. And maybe we break up, maybe we break down. Who knows? We'll see. And maybe this date doesn't do anything at all because maybe this isn't actually the bottom. But what we would want to do is we would want to put the high to the low or the low to the high and try and get a time scale, right? Let's see if there's any other levels that might be able to give us an indicator for time. Let's put this here. I don't think this will. Nope, that doesn't do it. Okay, let's delete that. What about this guy? Ah, the yearly low with the yearly high gives us a May 14th to May 19th Fibonacci timestamp. So we'd be somewhere right in here. where we would be getting ready to make a move. So we'll see about that. That might be interesting. I'm going to leave this up here. We'll put that, yeah, we'll leave that up here. All right. Now let's close these down. Let's talk about long-term trend or parallel channels, long-term channels rather, not necessarily parallel. So let's do log. This is, so now you see the log, it's all flattened out. All right. So what we're looking at here, so there's basically two things. So long-term channels are simply parallel Fibonacci channels used on log scale with 0.25 levels. So meaning like we have a 0 level, a 0.25, a 0.5, a 0.75, and a 1. Okay. Long-term channels are extremely useful when determining long-term down or up trends and when they're over and when the asset is ready to reverse. All right, so let's put this on here. So we want to go to our Fibonacci. Let's see. All right, we want our Fibonacci channel, Fib channel right here. Okay, let's put this on and let's start right here. And we'll go right there to the all-time high. Actually, we'll come. Where do we want to do that? Let's go right here. And let's see our settings. All right, so we want to change this to 0.25. Oh, 0.25, 0.5, 0.75, and 1. I'm going to turn everything else off for right now. Okay. How perfect was this? How perfect was this? So this, we put it in log scale and we look at it and we can see where it's kind of overextended, right? There's different ways to measure this. Obviously, you wouldn't have this as 1, but when you get a new high, you can change that to 1, right? And you would see, yes, like right here, when we're breaking out of this, this is a change, and this has been a change, right? We have reversed. So that is, yeah, it's really true. It's really cool. But basically that's it. So you want to come to your tools, right? So the top one is your cursors. Then you have trendline tools. Then you have your Gann and Fibonacci tools. You want to extend this menu out and you want to come down to the Fib channel, right? And when we draw our channels, you can start at, well, for the channels with Fib, you want to start at the bottom. So you find the bottom, you find the other lowest bottom, right? And then you extend it to the top. And then you can click on this and change the settings like we did. Settings, you go to style, you need your 0, your 0.25, your 5, your 7.5, and your 1. And you can do whatever colors you like. I'm not bothering with this too much. So yeah, very, very cool. We have that set up here. What would happen if we went with this? Say that was it. All right. Do we like this? Do we like that even better? I don't know. Not so sure. Just something to mess around with, right? I don't necessarily think that I would put that there just because this is so far in the past, right? We're really looking at this here. But if we were to draw it like that, obviously we're getting a lot of play on this 0.25, came up, hit this 5, 0.25, came up, hit this 7.5, right? We're getting support. So there's a lot of truth to this. It's not like this is completely bunk, right? But before you had this, all you would have would say be this one right here. And that definitely would have given you the top. That would have given you a good short, no doubt about it. So yeah, so that's quite interesting. I probably wouldn't extend this over here but it is interesting to look at, right? And it does have some pretty decent adherence. So you know, it's a possibility, but I don't necessarily think so, right? So that's good. I want to put this, I want to look at it from the high and go to low now. So let's try this. So we go from here to here to here. Okay. Is there a way to flip those? I think that there is. But I don't remember. Okay. So looking at this, oh, okay. So if we did have this, I mean, this is a channel, clearly, right? Let me get this a little bit more precise because I see that this is a better wick. Okay. So if that's the case, if we're going to go with this idea, then back testing this channel could absolutely be a possibility. Back testing meaning we're hitting here, right? And if we did, that'd be a great buy opportunity. It would correspond very well with this untested point of control, weekly point of control at about 2250. It would also be a swing failure for this right here. So yeah, it could be a very good level to be first stopped out on and then and then buy. Hey, what's up, Baffles? Nice to see you, man. All right, let's just see. Okay, perfect. So, all right, so here's some more about, so long-term channels must be used on a high time frame, meaning we're looking at least the daily chart. Has to be daily chart and use weekly or whatever, but we have to be at least on the daily chart. Long-term channels they become useful when an asset has years of data. So for instance, you know, the stock market, obviously Bitcoin, Ethereum, where there's a lot of data that we can use, right? That's really when it becomes helpful. We could see how helpful that other channel was as far as predicting the high, right? Or maybe when the bull run was over for that trend. Log scale is extremely useful when you are analyzing more than a year of data and the price is extremely volatile. So we're in log. It's just this little, you know, LOG down here at the bottom. But you can see this is what we would be looking at non-log, and then we put it into log form and it kind of flattens things out. It just it averages out some of the volatility, right? So anyways, when we're doing long-term scales, like you're looking at things long-term, it definitely helps to look at it with log, right? It kind of makes it a little bit more proportionate because there's just so much volatility, and yeah, so it is helpful. So let's see, what else do we have here? So yeah, basically, I want to go back to here. I want to go back to this channel here because I think it's very, very cool. Let's put this one here. Come to the top. So you can change these as you need to, right? To make it a little bit better. And obviously we're going to get data as we move along, right? So like this right here, if, you know, pretend we don't have all this data up here. If we're moving and we put this in, we're going to adjust it and say, okay, this is our level, right? And then we're going to watch this go and we're going to come up, right? Maybe this was this was our high before, you know what I mean? So meaning this is what we were seeing. Okay, we break above it and we come way up here, right? We're going to know we're really overextended. Let's just put this on here. So let's do 0.25. We can do projections as well, right? I'm gonna keep putting levels on here. So 1.75, and then we can even have a 2, right? So that'll help us as we continue to go. And you can keep adding levels. A lot of times you don't want to do small increments like this. You want to do like a 2.25, right? 3.25 or whatever. You can really get some extensions out here to see, all right, where are we going to find some resistance. But right here, we kind of, it was the 1.75. We didn't quite make it, right? The 1.5 is where we got a lot of resistance. But this changes over time, right? Because we came down and we actually broke this level. So we want to clear that up. And we want to move here. Obviously, we got a new high now. So we're going to move the high there. Okay. And continue to clean things up as we go along. But yeah, this is played out pretty well. I'm going to change this because it's very, very messy now. Cool. But yeah, where it's in log and we've got a lot of data. This is years of data that we're mapping out. High volatility. We can see how effective this has been, right? And then once we did break it, excuse me, we did have a pretty big drop, right? So then the question is where are we now? Are we in a channel, like a parallel channel? And are we going to be breaking down from here? Could be, definitely could be. Or do we continue this and we move up, in which case we then extend this, you know, to wherever, if this is the bottom, then we extend this out and this would be our new channel, right? We would look for maybe some resistance as we come to the 25, right? We'll see where we go. So this is where we have to alter the channel to continue to clean it up and have it make sense. All right, so let's see, as far as what I have here is my notes. So while in a long-term downtrend, channel breaking, let me read this again. While in a long-term downtrend channel, breaking out of it on a sideways price action is still considered bullish because all the high selling pressure has been lost and dried out. Another good confirmation of a bullish breakout from a long-term channel is also if price retraces to at least the 382. Okay, so let's map this out. Let's go. Let's go right here. And let's get rid of this stuff. Okay, the 382. Let's see if this plays into this. Oh, come on. This will go right there. And we'll get rid of the background. Here's the 382 right here. We have retraced to the 382, right? Yeah, I mean, we definitely have retraced to the 382, but I think we need to. This is not it's not convincing for me. Okay, let's put this in a channel. I mean, we have it in a channel. Let's put it in a Fibonacci, in a fib channel. Let's put it up here. Okay, now we would map this there. Okay. How well is this being respected? Somewhat. Not that interesting, to be honest. But plausible. Anyway, so the main takeaway here is looking at long term. So if we continued, I guess this would be the thing. If we continue to be in a downtrend, we would want to, make sure that we've got this placed. Let's map that. I really do want to get this mapped here though, because it's possible that we have broken out of this downtrend, right? We broke out, maybe we retest it and then move up. That's very, very likely. I could see that as a likely scenario. Kind of don't want it because I get stopped out, but that's okay. So this right here, if we continue to trend lower, that really would be a great level to buy. We'll back test this and then we'll move on out. Also, let's adjust this channel just so that we're completely objective and put it like that. Right? In that case, maybe, and this would be the obviously the real bearish scenario, which would be we put in our Elliott waves. So we would have our 0, we would have our A, our B, our C, and maybe D. I don't know that I would go E. Probably not going E on that. But possibly, right? Possibly what we could do. C, I don't think we would go that low. It would have to be like here. It'd have to be about here. Unless we only went, yeah, so if we're going with like this type of trajectory, maybe like this. Like this, but then again, we wouldn't have the Elliott wave. I'm telling you, I'm thinking that this is a reversal. The more I look at it, the more I'm like, yeah, it just doesn't map out cleanly. We'll see what happens. We want to see. I don't know if we're gonna get a back test. Maybe we're good. We'll just move on up. But as far as this channel is concerned, moving here, I mean, we broke out of that. We broke out of that in March, and we haven't really looked back. So do we find support and move up? I sure hope so. I think so. Devin, what's up, dude? Love you too, man. Thanks for being here. I'm just trying to map out this this chart, and I'm telling you, this is what's cool. Here's the cool takeaway, right? Aside from everything, and these lines are our paper trade, because we've got a couple levels that we bought in on this. This is the cool takeaway. We had two channels. We have our bigger upward trending channel. We have our smaller downward trending channel. And look at where we got our bounce today. I'm going to zoom in. Like, perfect, bro. Absolutely perfect. So it's no surprise, because when we're looking at levels, all we're doing is just finding investors. No surprise that investors, there was a couple groups ready to buy here. There was a group that was ready to buy this bottom trend line, and a group that was ready to buy this trend line that's going up. And we got it almost right at the crux, which is amazing. And this is what's so cool when it comes to technical analysis. So we've got one more buy order. We were like $14 shy from getting it filled. We'll see if that ends up getting filled. Yeah, Devin, it's hard to call it, which means I'm bullish. I love it, man. It genuinely is one of these moments where we sit back and we say, yep, it could go up, it could go down. We'll see, right? We've got enough reason to believe that this would be a good value area. And if it is a good value area, it would be very, very bullish. So that's why right now I'm like my bias is bullish. That's why I'm taking out longs instead of putting in shorts, right? But we've got our stop loss down here at 2400. There's other levels that we'd be looking at lower, and that's basically it. At this point, it's just we just wait and see what the market does, and we see if the probable trade comes into our favor. Now, one thing, since we've got a couple people here, this is a Fibonacci timestamp, or like a trend-based fib time, and let's keep an eye on these dates, because if we get some cool bullish movement, May 14th to May 19th, I want you guys to be impressed. What we did is we took the yearly low and the yearly high, and we were given this column, this range. And we'll see if anything cool happens. I'm hoping for bullish movement, but this is typically where we get a reversal of whatever the trend is. So if we're in this downward trend, I hope it doesn't mean that we necessarily are finding that low here. I mean, we would still be okay. Our trade wouldn't get blown up, right? But that could be what it means, is that we continue to trend, right? And maybe we break down and then we move on up out of here. But these time things are insane. They're so insane to see. So we will we'll take a look, and I'm going to keep this up so we can see it, because if we can hit these time, like these this time print, it would be great. So the Fed is speaking next week too. Same time we ran first time last year. Let's fucking go. Yeah, the Fed, I gotta say, the Fed is, in my opinion, they are showing that we're in a weaker economy. So we'll see what they do. Obviously, we got the Fed minutes a couple days ago, right, where Jerome Powell came out and they said that they are going to raise interest rates, but only half of what was expected. Let me tell you what I like my read on this is. So the Fed is a one-trick pony. They can raise interest rates and they can lower interest rates, right? They only raise them so that they can lower them again, right? The Fed has not, I mean, they have in a way, but they've not actually adopted like a negative interest rate policy. So it's not like because the European central banks, yeah, they've gone negative. I mean, which is just insane. They're paying people, well, they're paying banks to take out loans. So I just want to say, for all of the corporatism that exists within America and all the bullshit and too big to fail, I don't want it to just be thought that this only exists in America. Literally, other European central banks are paying their banks to take out loans. Okay, so I wish I had a negative interest rate on my loan, but I'll tell you something. The trickle down effect, that doesn't play out so well. You know what I mean, when it comes to the banks giving a negative interest rate loan, meaning they'll pay you to take their money. Yeah, that's a pretty cool perk. Let me just tell you. But yeah, so as far as our Fed goes, right, the Federal Reserve, they're an independent body, and they try to be nonpartisan, non-political. Let me tell you, that's all bullshit. Of course not, right? Of course not. They want things to be, I mean, look, we're in crypto. We see how much corruption there is. And we're talking about people getting, scamming people for a few $1,000s, maybe $100,000, maybe $1 million if it's a big scam. We're talking about the ability to print the reserve currency of the world. You tell me that motives don't trickle in, greed doesn't trickle in? Of course it does, right? It's too much power for any individual, let alone a separate entity, not even the government. So I would say audit the Fed. That was a chant that I used to have back in the day and loved. So all right, when it comes to the Fed, them saying we're going to raise it 100 basis points. Okay, 100. You know what that equals? That means 1%. That's not that big of a deal, considering that we got multi-percent cuts. Time after time after time. So 1%, they say we're going to raise interest rates 1%. You know what used to happen? They would come out and they would just do it. Hey, this is what we're doing. We're raising interest rates. We're doing this policy. This is what it's now. Now it's this. We're going to do this, everybody. So you should really start planning that we're going to be raising this with a big interest rate of 1%. Right? And then everyone scrambles and they change what they're doing. Okay, we got to price it in. And what do they come out with? Hey, everybody, we're only going to do 0.5%, right? And everyone goes, oh my goodness, hey, we planned for 1%. Now we're only getting a 0.5% raise. This is really good. This is good for us because, we were budgeting for that, but we only needed this. So now, okay, cool. Now we've got some space, right? And the Fed says, and you know what? You know what's even better? We're not even doing it right now. We're going to do 0.5%, but we're going to do it later. Okay, what is this admission? The admission is that the economy is so damn weak that they can't even come out and say we're doing a 1% interest rate hike, even though we've been at zero for, how long have we been at zero? Way too long, right? I know. It was during the Trump administration that they started to raise it from zero, but we were at zero for a long time. And they raised it, and then they've cut it since, and blah blah blah. So they have to come out and they have to it's like over promise, or sorry, under promise and over deliver, but in this way of saying we're going to do 1%, and then they say just kidding, we're doing 0.5%, so people are bullish. Then they say but we're not even doing it right now, which you were probably expecting. We're going to do it next month or the following couple months. And when we get to that time where they're supposed to do it, they might do it, or they might say, you know what, we've been taking a look at things, I think we're going to do 0.25%. We're just going to keep it mild. Obviously the market's been responding well to this. Let's keep it going. Let's just do a 0.25%, right? It's such low expectations over delayed over a certain, a lot of time, and yet what they're telling people to speculate is high. Oh, speculate for bad stuff. And here's the fact. This is what I truly believe. I truly believe that the Fed should come in, raise interest rates, and then just get out of the game. We need higher interest rates, and it would bring a lot of pain. It would quicken the like a recession or possibly a depression, especially with all of the money that was just printed with COVID and the shortages, people not working, just the closures, the money printing, everything. There's going to be a day of reckoning for this, and we already had a day of reckoning coming that we've been prolonging because we have been keeping interest rates too low for too long. So the medicine is higher interest rates. So I'm in favor of the Fed raising interest rates. They should raise interest rates, and they should stop this nonsense. They should stop printing money. If you were in a project and the devs just continued to mint tokens, mint coins, you'd be like, hey guys, are you going to stop? And they're like, yeah, you know what? We're going to slow this money printing by 1% next month. Right? You're like, okay, is that really a lot? And they're like, actually, you know what? We thought about it. We're actually going to do 0.5%. You're like, well, that's not good, right? We want we need you to stop minting tokens. You're creating massive inflation. You're ruining the value of the tokens I'm holding. And they go, okay, yeah, so we'll do 0.5%, but we'll do it next month. Okay. Now, in crypto, we see this as a bad thing. We're like, no, dude, stop. Matter of fact, can we do a buyback and burn? Can we buy some of these tokens and burn them? Right? This is what we want in crypto. We want deflation. We want our tokens to continue to get stronger with time, increase the value of the tokens with time. Why does the world want a weak dollar? Why does the world want the exact opposite? Well, let me tell you, I don't think the world does. It's the corporate interests. Why do they want it? Because look, if a project was like, hey, we're going to be minting tokens, but Devin and Baffles and Baron and Mr. Lucenary, sorry, I had to click on your name to see the whole thing. Because you're listening on my space, I'm giving you the tokens I'm minting. You guys are gonna be like, hell yeah, that's dope, right? We're getting free tokens. That's awesome, right? Matter of fact, in Europe, you're gonna pay me. You're gonna pay me to take your tokens for free, which is what they're doing. Guys, that's bullshit. That's absolutely insane. That's insane policy. It hurts the little guys. It hurts the people that are trying to save money, that are hodling, right? That are staking, that have their money in their savings accounts. Let's put it into terms with crypto, because they're inflating way more than what you're even able to earn. So if you save money, you're dumb, right? If you're hodling a token where devs are minting new ones and giving them out to their friends, you're dumb. You're doing the wrong thing, right? Your money is going to continue to go down. Your value is going to continue to go down, and they're going to dump on you. This is what's happening. What do you think? This is what inflation is. And so I want the Fed to raise interest rates, but it's gonna suck because the thing is the institutions, the banks, everybody, right? And now it kind of got into everybody with the whole COVID relief bullshit, getting money. Everybody's now getting addicted. They're pricing in that they're getting free money every month or every year, or however it's distributed, right? Wall Street's pricing in that they're getting free shit. People are pricing in that the interest rate on a home is 2.5%. When backtrack 10 years, you're looking at 9.5, or 15 years, you're looking at like 15% interest on a house. Right now we're 2.5%. It's priced into the market, and it changes and disrupts market conditions. It changes and disrupts the pricing mechanism. Right? We've seen price controls. Price controls don't work, especially from a centralized body. Price controls don't work. You can't do it. But if you control the price of money, ultimately you have the ultimate control of prices. You are doing price control, but through one mechanism, instead of saying, okay, I think toilet paper should be this much and water should be this much and makeup should be this much, right? Those type of price controls, which we've done and failed in the past. Now we just price money. So yeah, I would love to see the Fed raise interest rates. It's the right thing to do. They need to stop printing money. They need to strengthen the value of the dollar. Why? Because we hold the dollar. We hold the dollar. I don't want my money to become worthless, more worthless than it already is. So there's my rant about the Fed. I think the Fed, their approach it's an admission that the economy is extremely weak, because they're not just coming out and saying we're raising it 1%, deal with it. They're saying we're going to raise it 1% next month. Just kidding, 0.5%. You know what I mean? It's like all of these games trying to build hype, trying to build whatever. And look, it's not going to work. It's not going to work. And unless they're going to go to negative interest rates, the only reason why they're raising interest rates is so they can lower them again down the road. Because this is like them doing a fake buyback and burn. That's kind of what it is. You have a dev wallet, you have tokens that never made it into supply, and the team's like, man, the chart's looking pretty shit. How about we do a burn? We'll take all these tokens that aren't actually priced into the market, and we're just gonna send them to the dead wallet. Right? Does it do anything? No, of course not. And that's what they want to do. They want to accumulate these tokens, so they want to raise interest rates so they can lower them in the future. So anyways, there's my rant on the Fed. This is why I believe in crypto, because you hold your money, you get to put it where you want. These are cryptocurrencies. These are currencies that compete against the dollar. The dollar is managed from a centralized body that's doing a terrible job. And you know, look, we get to compete. So Ethereum is in competition with the dollar. We need more institutions. We need more businesses willing to accept payment in Ethereum, in Bitcoin, so that we can actually truly have a like real competition. Because right now, through centralized exchanges, you have to take it in, you have to exchange it for dollars. They got to see that, they got to tax that. You know what I mean? We need to get away from that. We really do need an ecosystem where people can accept, or people start accepting Ethereum and Bitcoin as payment, right? It happens a lot within this world, within crypto, paying people and influencers and blah, blah, blah with Ethereum and with Bitcoin and whatever. We need to get to the point where here's the S&P. Sorry, I didn't even mean to do that. But we need to get to the point where we are accepting payment in, oh my goodness, in Ethereum, so that we can truly say that we're competing with the dollar. This is what I believe. So anyways, thanks so much, guys, for tuning in. I hope this is interesting. You can tell I really do not like the Fed. I think the Fed is corrupt as shit. There's a lot of good books on the Fed, like The Creature from Jekyll Island, that talks about the inception of the Fed. Lots of interesting quotes about the people that create it, and why it was created and all this stuff. Look, the income tax didn't exist before the Federal Reserve. We used to have gold and silver that backed our money. Now we have perpetual debt that backs our money. It's no good. But put it in the terms of crypto. Would you invest in any project that had the same, modern money mechanics? That's what they call it. It's modern money mechanics. You know what it's called? It's called you print the fucking money you need. That's what it's called. It's not something fancy. Modern money mechanics. I love that. They're so full of shit. It's just them printing the money they need. You would not be invested in a project that had the same money mechanics that our central bodies employ around the world. So don't keep your money in Ethereum. Keep your money in Bitcoin. Invest in crypto. Accept payments in crypto. Let's get this going so we can have a real let's really compete. Let's pay mortgages in crypto. Let's buy bread and milk in crypto. If we can get there, then the dollar is going to be shown for the scam that it is. The problem why it works is because it is a Ponzi scheme, right? Where's Ponzi Slayer? Where the fuck is Ponzi Slayer? I don't know the guy that well. I just know I was just thinking Ponzi Slayer, but anyway. Yeah, because that is exactly what the dollar is built on. All right, guys, much love. Sorry for the F-bombs if that was off-putting or you couldn't, it became not safe for work. But I think I'm going to end it there. Much love to everybody. You guys have a great day. I hope it was cool learning about long-term channels, kind of that log button, and seeing where current price action is. We'll see if we can move up. So everybody take care. Have a great day. Much love to you, and have yourself a great weekend. See you later.